Hello folks, LA Little here with TA Today, bringing you neoclassical technical analysis on a regular basis, giving you trading ideas, setups, and thoughts about where this market is and where it's going. Let's get into it. Hey folks, LA here. We're going to look at the market, what it did last week. Essentially, it worked its way higher again, pretty much across the board. I mean, almost everything worked higher. If you look at it, you got the same script here with the semiconductors, the industrials, right? Technology. These are the things that are driving this market, and they continue to drive it. We actually had some contribution from the mega caps last week, although they still lagged a bit. If we look at the summary here on the alpha, I go through, and you can read through all this, but I go through this whole idea of the fact that we have the mega caps, which is this line, right, trailing the NDX. And what it's telling you is that they're selling this relative to whatever else, and whatever else is the SOXX, right? So they're going after the chips, they're going after the XLI, right? That's where the money's flowing, because that money is coming from what? It's coming from the mags. It's coming from these guys. And so that distribution of money from here to here is benefiting these greatly, and it's taken away from those. And you see it in the indexes, or not in the indexes, but here in the charts. So, the point is, at some point, right now, it's kind of a wash, because if you look at it, XLI and the SOXX, they're roughly 29% of the NDX, 23% of the SPX. If you look at the mags, and I believe that was up here, yeah, right here, the mags are 28.7 and 17.6. So, if you look at it as a whole, as long as the SOXX keeps going up, it goes up at its same or more than the mags go down, then the market's going to go up. That's just the way it works right now. And I go through a whole bunch of other stuff here that you can read through. Let's go to the charts, though, in terms of what's important for the markets right now. And that is that the SOXX continues to work higher. I mean, there was the potential for a failure here with this kind of a hanging man, but it got right over it, right? Closes at a new high. That just kind of negates it and says, you can go higher. If we look here at the megaphone pattern that's on the SOXX, right, you can see that, at least right now, if it were to go straight up, you could get up into this area, which is probably going to be around the 659, 660 area. And so, top side, you got another potentially 28 points. NDX, this thing's strong as well. And if you look at it, the pattern is very positive. I mean, you got these long tails, right? So you get a drift down, closes up inside there, has a little bit more volume. When you look at the volume side of it here, has a little bit more volume on that, but nothing special. And then it just another long tail as it drifts back up towards the tops. I can't interpret this weekly chart as anything but bullish. And if I look at the S&P, it looks almost the same. So to me, the market is doing very well and continues to do well. Part of the reason for that is oil dumped, right? So I kind of suggested last week that if oil dumped, right, which it did, the equities are going to jump. And that's what they did. And then they probably pull back, which they also did. But they're hanging in here, and they're going to try and make another run, more likely. That oil is low at the bottom in the range now. It just broke this swing point low. So the normal thing is, and this is on a weekly, so within 1 to 2 weeks, this thing should get back up here and test into this area. And I wouldn't be surprised to see it do it very quickly. We're probably in a range now. I don't think you're going to get a huge drop immediately off of oil, but where it is positive for the equities. Rates really doing nothing, kind of drifted in, even though this Fed was supposedly hawkish. And if we look at the mags, which we talked about already, they actually broke back over this bearish retest region here, and they're into this one. So they're not doing horrible, but they've got a lot of resistance up above them. And
given what I've just talked about, I suspect they're not going to be the ones that are pushing up. I gave you some relative strength here. It's interesting. The restaurants continue to be strong. Oil was the big loser to the downside. A lot of stuff pushing to the upside. If you look at the secondary stuff, there's really nothing there that's alarming. And if we pop up down the bottom line here, these markets to me, they just exhibit this willingness to stretch. And on the secondary indicators, there's really nothing to say these things are going to go down now. And so when I think of all that, and I think of what I'm seeing here, it looks to me like, this market's going to try and work its way even higher. And, if I saw, and it's up above, but I saw that potentially the IRGC is going to start doing their tolls again, and they've closed the strait. Who knows where that's going to end? That exogenous thing is out there. I mean, if they shut stuff all off, oil jumps, markets are going to pull in some. But really, worst case, probably the markets are in a range, right? They're trading in a range. They're up and down. They're nearer to the top than they are to the bottom. And if they can just hold this range for a while, eventually they'll probably break to the top side. All right, that's where we're at. Have yourself a great one. I'll see you next time.